Equity Group Holdings Plc has registered the strongest quarterly performance in the history of the organization, exceeding the quarterly average of the last 4 years. Releasing the results at Equity Centre in Nairobi, Equity Group Managing Director and CEO Dr. James Mwangi said the execution of the strategic business plan has started to reflect on the balance sheet.
We have really focused on creating the governance structure, and we have created the leadership structure both at the board and executive, and we can now say we have the team that will execute the future of this group.
The group's profit after tax rose 17% to 34.6 billion shillings, driven by a 9% growth in net interest income and an 18% drop in interest expense.
So our total cost down 2%, giving us profit before tax of 12% and profit after tax of 17%. What does this show? It shows the resilience we have been able to build in the group during this transformation. It was to build the resilience.
The group rebounded with a 4% loan book growth to 825.1 billion shillings despite a tough macroeconomic environment of uncertainty, slow GDP growth, high interest rates, volatile exchange rates and inflation. Customer deposits registered a 2% growth to 1.32 trillion shillings and total assets grew by 3% to reach 1.8 trillion shillings.
A balance sheet the size of Kenya, which is 1 trillion shillings, then tells you what it means when you move. When Kenya funded the subsidiaries in the region or the investment in the region, it was doing a return of 4% on asset. And Kenya has bounced back to 4% return on asset, but this time on a very big balance sheet. And that explains why return on equity is now at 28%.
Regional diversification has transformed Equity Group into a regional bank with nearly half of its deposits, loans, assets and revenue generated outside Kenya. The group saw subsidiary performance in Equity Bank Kenya recording a profit after tax increase by 40% from 13.9 billion shillings to 19.5 billion shillings. Equity BCDC in the Democratic Republic of Congo recording a 22% rise to 9.1 billion shillings, up from 7.4 billion shillings. Equity Bank Uganda recording a rise of 40% to 1.9 billion shillings, up from 1.4 billion shillings.
We're very well positioned, particularly in the critical markets of Kenya and DRC, where we occupy position 2. But it's not just position 2, it's a substantial position 2. When it comes to DRC, it's a systemic position, 25% of the market share. You go to Kenya, it's 13% of the market share. You go to Rwanda, is like 19% of the share. So if you then combine the capability of a transformed organization, an environment that is enabling, that positions as the go-to bank for trade finance and cross-border trade.
Through diversification into insurance, Equity Group is evolving into an integrated financial services provider. In its third year, the life business, licensed alongside general and health, ranks second in the group credit insurance, taking up 7% of the market share, 7th in return on equity, and 8th in profitability.
We have now done, in just 3 years, 16.6 million policies. And just half year, we've done almost an additional million new customers. It is a diversified reach. It is 6.7 million unique policies.
Non-banking businesses in technology and insurance grew their contribution to group assets from 1.4% to 1.9%, revenue from 2.8% to 4%, and profit before tax from 3.5% to 3.8% year on year.
Brick and mortar is only doing 1.8. It's now less than 2% of the customers who use our traditional infrastructure of branches. The business has gone digital, and even third parties, whether it's agents, ATMs, merchants, those are on electronic platforms. The customers have migrated from fixed and variable cost channels to self-service.
As the group advanced its business transformation, it also strengthened its social and sustainability agenda through the Equity Group Foundation, channeling $715 million into impact programs.
We don't want to be seen this very, very successful group, but enjoying success alone. We want to enjoy success with the members. We want to enjoy with our host community. We want to enjoy this with the public. And we have everything for everybody. For our rural community, we have food and agriculture. For our young people, we have education and leadership programs, and we have enterprise development and financial inclusion. They can employ themselves. And for all of us, we have health, energy, and environment. So nobody is being left out. If you multiply $715 million with 130, it tells you the amount of money in excess of 100 billion that we have expended in shared prosperity.
Equity has promoted sustainability by distributing 520,549 clean energy products and planting 36.4 million trees. In 2025, Equity Bank was named East Africa's best regional bank and for the second year, Kenya's most valuable brand at the African Banker Awards. These awards reaffirm Equity Group's regional leadership and impact on financial inclusion and socio-economic transformation.